Well, straight to the stock markets now. Ahead of the outcome of the Monetary Policy Committee MPC meeting, the market furthered its northward journey by 0.48%, despite some analyst expectations of cautious trading session. The All-Share Index traded higher to close at 52,621.19 index points as against 52,369.13 index points recorded in the previous day's trading session. The market's capitalization of equities appreciated by 137 billion naira to close at 28.6 trillion naira compared to 28.5 trillion naira recorded in the previous day's trading session. Also, the market's positive return year-to-date increased to 2.67%. Market breadth closed positive as Transcorp PLC led the gainers. Chelaram PLC led the losers, while UBA PLC was the most traded equity at the end of the day's session. To analyze this, Paul Ozum, stockbroker, joins us virtually. Thank you for joining us. Good morning.
Yeah, good morning.
Well, we see the northward movement of the NGX, and that's, of course, as investors' optimism continued. What do you think is responsible for this? Paul, can you hear me?
Yes, I can hear you.
Yes, I'd like to get your take on the positive movement of the market yesterday.
Okay. At this time of the year, many companies have declared dividends, and you have a lot of investors who are reinvesting their dividends in the markets, notably foreign portfolio investors who have collected dividends and cannot repatriate their dividends back to their own country. What they do is to reinvest the dividend that are paid to them in the same securities. So GT Bank paid their dividend just last week. Then you had other banks like the Zenith, the Zenith Bank and UBA that previously paid dividends. So you're having reinvestment of dividend proceeds. Mind you, the banks shows very strong performance in their full year results for 2022, and their first quarter results, which we saw at the beginning of the month, was also very impressive. So we're seeing that's playing out in the market, and because of that, we're having something like a rally in the number of banking stocks, starting from Guarantee Trust Bank and Zenith, and spreading to other sectors of the market. Then it's causing a pull effect in several stocks across the market. So that's why we had that uptick in the market of 0.48 yesterday. On Monday, we also had a similar uptick of 0.35% in the market. So we expect this buy sentiment, to continue until this class of investors exhausts their dividend investments.
Sounds like a bullish week indeed. But the continuous rate hikes have stifled the country's fragile growth much more than any associated benefit. And we know that come the end of the MPC meeting today, there have been some possibilities or some predictions as to how the MPC or the MPC might increase the interest rates. What's your take on this?
Yeah, the rates usually have big impacts on the markets. If there's a further rate hike at the end of today's, it will affect the market significantly in terms of you have more sell pressures in several securities. You know, the money markets typically compete with the equity market for the same funds. So if interest rates are going higher, it means that people will be selling up to invest in the fixed income markets. So that would trigger a very sentiment on the market, at least in the short run. However, if you look at it from a broader perspective, especially from the perspective of games theory, a rise in interest rates means that lenders have more money to play around. They will earn more interest income. That's from the perspective of banks. So if you look at what has happened to banks since the interest rate hike started mid of second half of last year, banks are reporting stronger performance. Their results have been improved significantly. If you look at from GT to Zenith to access to UBA. They are showing strong numbers now than they were performing before. And it's just the consumer goods and industrial goods sector that tend to slow down due to rising.
Indeed, looking at what went down in the market yesterday, especially as we see some uptick in the market, which started on Monday. But while we wait to join Paul back, let's link up with our correspondent, who is right now at the trading floor of the Nigerian Exchange, Blessed Omonose. Good morning, Blessed. Tell us what's happening at the trading floor.
I believe you can hear me now.
Go ahead, please.
Okay, so currently at the trading floor is kind of empty at the moment because stockbrokers are yet to come in to begin their trading activities for today. And reason being that some of them now have to trade at the comfort of their home after the COVID-19 pandemic that forced a lot of people into working online or trading online in some cases. But right now we have just one or two people who are currently at the floor of the trading, at the floor of the NGS doing some trading activities, while others are currently at the comfort of their home carrying out trading activities as well.
Okay, so are there any signs that there may be some activities in the nearest, maybe some minutes to come?
So going by the information I got this morning, I learned that before now, traders had to come in here. That was before COVID. Stockbrokers had to come to this trading floor of the NGS to trade. And for those, when COVID came, there was a platform that stockbrokers were subscribed to carry out their trading activity. And then to make trading activities seamless for the stockbrokers, the management of the exchange had to make that platform free for them. So which means that stockbrokers can trade anywhere they are in the world. Okay, so after the lockdown was lifted and activities opened at the stock markets yesterday, officially, that's for physical trading activities, we'll find out that stockbrokers actually decided that stock trading at their homes is even much better than coming right to the floor of the exchange to trade, because it's the same access that you have here that you can also have online. And you will agree with me that technology has changed a whole lot of things on the aftermath of the COVID-19 lockdown.
Let me hold your thoughts there, because we would still get some analysis from you. But let me come to Paul Ozum to hear what he thinks about the current switch from the physical trading to the technological way of trading.
Yes, even before COVID, most big stockbroking firms trade from their offices. We all have, like I speak to in my office, but Plant Capital, we have trading engines that has direct link with the Nigerian Stock Exchange. The system from our office is the same thing with what you have on the exchange. So most of the big transactions that take place at the exchange take place from offices of several stockbroking firms. However, small traders or firms that are not so large usually go to the floor to trade. Since COVID, many of those class of traders that go to the floor to trade, some of whom are independent brokers, they find it very more convenient to trade from their homes now, to trade from their various locations. And not just the big firms that have capacity to trade from their offices, but you now have several people who, from wherever they are in the world, if you like, being in UK, US, you have access to trade on the exchange via virtual private network, as VPN. So you can easily have access, which was not available before. But so because of that, it will be very difficult for brokers to congregate on the floor anymore.